Deal is achievable within days, within weeks? Is there that kind of runway?
Yeah, it's achievable. Both parties have to agree, yeah, sure.
When Carney took the stage to address his supporters last night, he mentioned Canada's relations with the U.S.
As I've been warning for months, America wants our land, our resources, our water, our country. Never. But these are not idle threats. President Trump is trying to break us so that America can own us. That will never ever happen. But
President Trump officially announced the cancellation of tariffs on Canadian aluminum, lumber, and energy, reversing policies that had caused 20 to 40% drop in Canadian tourism and raised construction costs by over 30% in New England. Meanwhile, Canada responded with emergency economic plans to support affected industries and strengthen trade ties with Europe. Why did Trump back down now, and what will this mean for millions on both sides of the border? President Trump surprised many by announcing the cancellation of tariffs on Canadian aluminum, lumber, and energy during a White House briefing. He said, "These tariffs are no longer needed as we've made great progress with Canada." The decision came after weeks of rising pressure from U.S. governors, business groups, and Canadian officials warning about severe economic damage. Experts at the Peterson Institute confirmed the tariffs had caused a 30% spike in New England home building costs. The U.S. Chamber of Commerce reported small businesses were losing millions each week. Canadian Prime Minister welcomed the move but said trust would take time to rebuild. Bloomberg analysts noted the decision followed falling support for Trump in key border states. Reports showed shortages in construction materials were hitting local projects hard. By ending the tariffs, Trump hopes to calm markets and ease tensions. But many question whether months of lost income and broken partnerships can truly be repaired. Before the tariffs were canceled, Canada took rapid and concrete steps. Prime Minister Mark Carney and Finance Minister Chrystia Freeland secured emergency support for industries hit by U.S. duties. They introduced 25% counter tariffs on 155 billion Canadian dollars of U.S. goods and promised aid for sectors like autos and steel. Provinces like Ontario and Manitoba passed laws to remove internal trade barriers, aiming to offset U.S. tariffs by improving access to markets and services at home. Cross-border collaboration ramped up too. 6 U.S. states invited Canadian premiers to joint meetings, coordinating on energy, tourism, and supply chain resilience. Meanwhile, Canadian tourism saw a 20 to 71% collapse in travel to the U.S., and nearly 56% of Canadian travelers canceled plans, prompting urgent provincial relief programs. Exporters also pivoted toward Europe and Asia as trade agreements like CETA cushioned the blow. This fast, multi-layered response showed Canada moving decisively, not waiting on Washington to shield jobs and communities before the tariff drama even reached its peak. Booking data reveal a 20% drop in flight reservations from Canada to the U.S. since early February, with hotel bookings down 10 to 11% in cities like Bellingham and Niagara Falls. U.S. Travel Association warned that such declines could cost the American economy $2.1 billion and lead to 14,000 job losses. 6 northeastern governors, including those from Maine and Massachusetts, invited Canadian provincial leaders to a joint meeting in Boston to coordinate relief strategies. Local hotels and restaurants reported empty tables during peak season, while small shops in border towns struggled with both falling sales and rising costs. Duty-free stores saw sales down 40 to 50% between January and April. Meanwhile, Canadian road crossings into the U.S. dropped 23%, indicating fewer visitors overall. Tourism agencies noted that cancellations affected even long-term snowbirds, pushing some to seek warmer destinations like Mexico instead. The result, businesses cutting staff, mortgages becoming harder to pay, and a rising sense of financial stress. For many families and local workers, the trade war's cost became personal, immediate, and hard to ignore. Tariffs drove New England lumber prices up by around 40%, freezing or canceling many housing projects. Breweries cut production as aluminum costs spiked, and families saw hundreds more in annual heating bills after new duties on Canadian energy. The U.S. Chamber of Commerce and Home Builders Association warned that the tariffs were sinking local economies. January housing starts fell 8.4% year over year, with officials linking delays to tariff-driven material costs. Governors from Maine to Vermont publicly demanded relief to save small towns and jobs. Analysts observed Trump's approval slipping in key border states as voter frustration grew. With mounting pressure from state leaders, businesses, and voters, all urging an end to the damage, the tariffs became unsustainable. Trump's repeal was the only viable exit to prevent deeper harm. Canada swiftly shifted gears to protect its economy, expanding exports to Europe and Asia through CETA and other deals. Aluminum exports to Europe surged after U.S. tariffs hit, helping balance domestic production. Ottawa also imposed 25% counter tariffs on $107 billion of U.S. goods and passed reforms to ease internal trade. Provinces launched campaigns encouraging staycations at home to cushion the blow. Canadian energy firms secured new contracts with European buyers to offset the U.S. market loss. Analysts at Export Development Canada noted that this quick pivot helped prevent a deeper recession. Provincial governments also engaged in trade talks with the EU to diversify long-term partnerships. These strategic moves proved Canada was determined to build a more resilient economy, one less vulnerable to any one country's policy shifts. 6 northeastern U.S. governors from Maine, Massachusetts, New York, Connecticut, Rhode Island, and Vermont invited Canadian provincial leaders to a private summit in Boston to address the tariff crisis. They discussed joint energy projects, rail improvements, and agreements on lumber and aluminum to keep cross-border flows steady. Governor Janet Mills emphasized that Canada was Maine's single largest trading partner, with more than $6 billion in annual trade, and warned tariffs would hurt heating fuel, tourism, and local jobs. U.S. governors called on Washington to hear from states where local business and tourism suffered. Canadian premiers reassured residents by coordinating with U.S. counterparts to sustain regional ties while national leaders sparred. These leaders also shared data on declining hotel occupancy, rising energy costs, and supply chain pressures. Some pledged joint tourism campaigns to revive visitor numbers. This back-channel diplomacy showed that while national tensions flared, regional leaders were already finding practical solutions to support their border communities. The tariff conflict rippled across the globe. European leaders moved quickly to protect their economic interests. In June, the EU prepared a €21 billion counter-tariff package and accelerated trade talks to avoid escalating the U.S. tariffs. France urged for stronger economic autonomy from the U.S., while Ursula von der Leyen proposed building a WTO-like structure with Pacific Rim allies to reduce reliance on American trade unpredictability. Canada also deepened ties with the EU, signing a defense pact and boosting trade cooperation, signaling a pivot away from U.S. dependency. Analysts warn that if key allies permanently shift supply chains, the U.S. might lose its status as the world's trade leader. Long-term damage to American business partnerships and global trust may linger. Restoring them could take years. Flight bookings from Canada to the U.S. dropped over 20 in early 2025 compared to 2024, while passenger traffic fell sharply, cutting deeply into revenue for airlines and hotels. The U.S. Travel Association warned these declines could collectively cost the U.S. economy more than $12 billion in 2025 and cause thousands of job losses. In border states like Maine and Vermont, small businesses that laid off staff or closed temporarily may never recover without strong tourism returns. Housing markets still feel the pressure from past lumber shortages, and energy providers report bills remain elevated due to lingering tariff costs. Trade experts say investor uncertainty could delay new projects, potentially stalling regional growth for months. Meanwhile, Canadian domestic tourism boomed, with provinces reporting multi-billion-dollar gains as residents canceled U.S. trips and opted for local vacations. Canada's pivot toward Europe and Asia remains in focus, and U.S. governors say they'll continue working region to region with Canada to rebuild trade ties. The next few months will reveal whether this healing process can fully restore economic bonds, or if long-term scars will linger. The U.S. Canada tariff battle has left scars on businesses, families, and entire communities. As leaders scramble to rebuild trust, the question remains: can real healing begin before the next crisis hits? Subscribe for more updates, like, share, and let us know your thoughts below.